Thanks for clicking. All eyes were on the Bank of Canada this morning as it was set to make its first interest rate announcement of 2024. We got our answer at 9:45 this morning, and to the surprise of no one outside of the real estate industry, the bank maintained its policy rate at 5%.
Ha! Gotcha.
And, as we'll see, while many had been hoping for any signs that potential interest rate cuts could be coming our way, the bank didn't provide much in terms of a definitive timeline, noting that although it does expect the CPI to return to target in 2025, it remains concerned about Canada's core inflation rate.
So tomorrow?
Indeed, as we'll see during the press conference held by Bank of Canada Governor Tiff Macklem and Deputy Governor Carolyn Rogers, that didn't stop reporters from asking about rate cuts ad nauseum.
I think I've answered this question several times, so I can ask the Senior Deputy Governor.
So what I want to do today is briefly go over the bank's policy announcement and then take a look at the press conference where the governor discussed potential rate cuts, quantitative tightening, government spending, and the future path of inflation. And then we'll discuss what to look for next. Speaking of what's to come, the bank announced in December that it was going to be holding a press conference at each and every rate announcement this year, and the governor, looking ever excited about the prospect, reiterated that in December as well. We will continue to cover these announcements in the press conferences held thereafter throughout the year. Click like and subscribe if you want to get those updates, but for now, let's get into this interest rate announcement. On to the announcement. As mentioned, the Bank of Canada maintained its policy rate at 5%. The bank noted that it expects inflation to remain above 3% for the first half of this year, but also remains concerned that core inflation isn't moving sustainably downward.
Governing Council is concerned about the persistence of underlying inflation. We want to see inflationary pressures continue to ease and clear downward momentum in underlying inflation.
With that said, the governor did note at the press conference that there has been a shift in the Bank of Canada's thinking, mainly that they're no longer discussing whether or not the policy rate is high enough, but rather discussing how long the policy rate needs to remain as high as it is.
What came through in the deliberations is that Governing Council's discussions about future policy is shifting from whether monetary policy is restrictive enough to how long to maintain the current restrictive stance.
Yet, the governor stressed at his speech that the bank continues to remain cautious, noting that continual upward pressure being put on prices from food, etc., means that the path back down to 2% could in fact be slow.
All this push and pull on inflation means that further declines in inflation are likely to be gradual and uneven. That suggests the path back to 2% inflation will be slow and risks remain.
And I think this is a good point. As we discussed at the latest CPI read, we've already seen 3% price increases in core inflation since March of last year. So when the bank goes to make its April rate announcement, unless we see price decreases over the next 2 months, the core inflation rate will still be sitting over 3%. Following his speech, the governor then moved on to the press conference.
Deputy Governor and I would be very pleased to take your questions.
He looks so happy to be there, doesn't he? And of course, right out of the gate, when can we expect to see rate cuts coming from the Bank of Canada?
If anyone advocated for a cut, and is there any sort of broad timeline for when we might see a first interest rate cut?
Just a brief note on that counter, I poked fun at the media last year for asking the same rate cut question multiple times at every conference, much to the understandable annoyance of the governor, as there is absolutely zero chance that the governor is going to answer the question. As such, I thought it would be fun, or revealing, to count how many times the governor is asked the same question in 2024. So, we'll keep track of how many times the media uses its finite access to our central bank governor to ask the same question that the governor is 100% not going to answer. For his part, for the first rate cut question of the year, the governor referenced what he said 10 minutes prior.
It's premature to discuss reducing our policy rate. The discussion, our deliberations are shifting from whether we've done enough to how long we hold, but there was a clear consensus. It's premature to be discussing cutting our policy rate. We need to see more progress before we have that discussion.
It's imminent.
Next, the governor was asked about quantitative tightening, which we've talked about so many times before on this channel. Mainly, when does the Bank of Canada plan on ending QT?
Give us an update on the expected timeline for quantitative tightening, and are you expecting to have to make any changes to that?
For his part, the governor said that the bank is waiting for the balance sheet to reach a more normal level, at which time it will start to buy up assets again.
Obviously, our balance sheet is gradually declining. At a certain point, it'll reach a more normal level, and it'll be time to start purchasing again to keep our balance sheet at the size we need.
So, quantitative tightening, if you'll remember, that's where the Bank of Canada allows the government to pay back its bonds without purchasing any more of them, which works to slow inflation by pulling money out of the market. The bank does indeed plan on buying up government debt again, replacing old bonds with new bonds, which, if the government is running a deficit, which it is, would obviously be inflationary. Speaking of government debt, as the press conference rolled on, the governor was asked if fiscal policy is contributing to higher inflation.
But I wondered if you had anything to say about the contribution of government spending, and if that's been covered, bond prices, the bond contribution.
The governor noted that although current fiscal spending isn't helping or hurting current pressures on inflation, any additional spending could indeed put upward pressure on prices.
If all those, governments actually do spend all that, it's certainly not going to help us relieve inflationary pressures. It's not seriously getting in the way, but if governments were to add more spending on top of what they've already planned for this year, it certainly could start getting in the way.
I think you got the point.
Next, the governor was asked, yet again, to address the mortgage interest cost argument. The mortgage interest cost argument being put forward by the usual suspects, mainly that if mortgage interest costs are the main contributor to Canada's inflation rate, then can't the Bank of Canada just lower interest rates and inflation will come down?
As you mentioned, shelter costs remain the biggest contributor to this above target inflation, but the Bank of Canada does have a direct impact on this, as when you set the higher interest rates, that is contributing to the higher mortgage rates as well. So if you're admitting to those shelter costs being that biggest contributor, why aren't you going to lower the interest rates now to get closer to that that target inflation rate and give Canadians some relief?
For his part, the governor gave the same answer that he gives at every other press conference where he's asked this question, noting that the bank isn't just worried about real estate, noting that if rates come down, mortgage interest costs would come down as well, but everything else could go up.
Yes, housing is an important part of the economy. It's a very interest-sensitive part of the economy, and that's something we take into account. But we're really looking at the whole economy, inflation across all goods and services, and shelter is not the only source of inflationary pressures. Look at the breadth of price increases. If you look at the share of CPI components that's rising more than 3%, that's slightly over 50%. So what this is telling you is that there's still underlying inflationary pressures across many goods and services. There's certain, inflation is still somewhat broad-based, and that's why we're concerned about the persistence in underlying inflation, and that's why we're holding our policy rate of 5% today.
And on this note, given the persistency of the mortgage interest cost argument coming from the usual suspects, I took a look back to 2021 when mortgage interest costs were actually pulling down the CPI and couldn't find any calls for the Bank of Canada to raise rates, given that the inflation rate was being artificially pulled down by artificially low mortgage costs.
I had no idea.
So, in summary, we do see a marginal shift coming out of the Bank of Canada, which is no longer considering if interest rates need to go higher, but rather considering now how long they need to remain as high as they are. With that said, the bank stressed that it is not yet considering rate cuts, noting that it's still concerned about core inflation. The governor was asked 3 more times during the conference about rate cuts, timing, and extent, and gave the same answer 3 more times, totaling 5 questions about rate cuts in a 40-minute press conference. The media didn't ask about the Bank of Canada's overnight repo operations that we've discussed so many times on this channel, where the bank is now providing short-term loans to somebody within the banking industry. Further, the governor was also not asked about the Canadian mortgage bond buying program, of which the Bank of Canada is going to be involved and was announced just last week.
I had no idea.
Yet, we get 5 questions about rate cuts, of which there's no chance the bank is going to answer. So, a shift coming from the central bank, a marginal shift coming from the Bank of Canada, but a shift nonetheless, whereas the media remains dependable as always. We will continue to track the bank's press conferences on this channel, as well as what's not covered at those conferences. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.